As of December of 2021, we've actually started to see a big shift in stock market values and what the future of our economy could be. And actually that shift could lead to one of the biggest stock market rallies in stock market history. Over the last 2 years, there has been a lot of things for investors to be worried about, like inflation and the pandemic and our supply chain issues. However, some investors on Wall Street and experts are saying that 2022 may become a booming year for our economy and our markets. So today I want to talk all about what exactly is happening right now on the New York Stock Exchange and with our economy, and why there has been a sudden shift towards positivity in 2022 versus what we have seen over the last 2 years. But before I get into all of that, my name is Nate from Minority Mindset News, and if you like this video, then smash that thumbs up button below and hit that notification bell too. That way YouTube shows our videos to way more money minds around the world, and we can keep making videos just like this one. So the first thing that investors can now breathe a sigh of relief over is the virus. Over the last 2 years, the pandemic has wrecked our economy, the stock market, and pretty much every other thing you can think of. From social distancing to economic lockdowns to stock market crashes and even rising inflation, there has been a lot for investors to worry about. However, investors now have their first big sign that the virus may be starting to disappear. In November of 2021, the World Health Organization identified a brand new variant of the COVID virus. They called it Omicron. Omicron was very big, and it really scared investors for a short period of time. You saw the stock market begin to tank because investors had whiplash over what happened in 2020. When the pandemic started in 2020, the stock market crashed. Everything closed down, people were getting less money, and businesses started to drop profits. This was all caused by economic lockdowns, and the stock market crashed because they knew people were going to have a lot less money and they needed to protect their investments and, more importantly, their money. It was the fastest stock market crash in stock market history. And in November of 2021, investors were very scared that this was going to happen again. And for a little while there, it looked like things were getting pretty bad. Omicron was spreading throughout the United States, and the UK actually identified its first Omicron-related death. So this new variant actually spreads a lot faster than the Delta variant and original COVID virus. However, it might not be as strong. And according to some health experts, that is a very good thing. The reason this pandemic was so bad was because the virus could send people to the hospital, and it could potentially do even worse than just that. So in order to protect our society, the United States government issued economic lockdowns. We didn't want millions upon millions of people dying from this virus. However, according to health experts, as a virus expands and as a virus grows, you're going to have the strongest variants first. So these are the variants that can send people to the hospital and do a lot more damage. Those variants of the virus eventually start dying out, and what you're left with is a very weak virus that resembles something like the flu, or the cold for that matter. That is what a lot of world health experts are saying about this new Omicron variant, and the stock market is very happy about that, for a couple different reasons. For one, this could mean that the pandemic is starting to go away and our economic activity can return to normal levels. Think of everything that businesses and people have had to deal with because of the pandemic alone. A lot of labor shortages, a lot of problems with supply, and a lot of issues with keeping stores open. You also had extra cleaning measures that a lot of these companies had to go through just to keep everything safe. Some of that will absolutely continue. However, some businesses are going to pull back on that when everything is back to normal. That could save them a lot of money, and it could make them a lot of money if they're able to keep their stores a lot more open. And it could start giving consumers a lot more confidence again to go out and start spending money. People can go out and go back to stores, and they can start having recreational activities again because this virus isn't that big of a deal. So what initially made stocks tank could actually make stocks boom in 2022. And this is something that investor Bill Ackman believes is definitely going to happen next year. Bill Ackman was one of the biggest proponents of closing the economy in 2020. He gave a big emotional speech on CNBC that basically said that America is going to enter hell if we don't start closing things down, at least for 30 days. Soon after, the stock market crashed. So in a way, Bill Ackman was right, but now he is completely flipping his ideas and is saying that this new Omicron variant could actually be very good for our economy. because it could mean that the pandemic is ending. So that is one thing that investors are kind of looking forward to in 2022. Of course, the virus in general is not a good thing, but it's starting to get a little weaker is definitely progress. Next, we turn our attention to the Federal Reserve. Now, the Federal Reserve has been in the news and has made news headlines time and time again over the last 2 years. Particularly, Jerome Powell has come out and said a lot of things about our pandemic and the future of our economy. However, in December, the Federal Reserve got together and really made some monetary policies in order to address inflation and our economy and how it can progress in 2022. I made an entire video on this breaking down exactly what the Federal Reserve said and what that could mean for our economy. So if you want to check out that video, I'll leave it for you in the description below. But basically, the Federal Reserve is starting to take inflation a lot more seriously. They're starting to raise interest rates in 2022, and they're going to pull back a lot of their quantitative easing measures, which at first, we all thought that when Wall Street heard that the Federal Reserve was going to be pulling money, they would get scared and they would have a taper tantrum like we saw at the latter ends of the Great Recession. However, directly after this meeting on December 16th, the opposite happened. The Dow and S&P 500 were starting to reach new record highs again after they were digesting the Federal Reserve's moves. And I think this is because the stock market is starting to realize that inflation is a problem. And if the Federal Reserve doesn't start handling inflation, that is going to be bad for everyone. Profits aside and investor mindset aside, we need to tackle inflation and we need to start dropping it, even if that means cutting into profits. Inflation got out of hand over the last 2 years because, one, our supply chain is being very constricted, and two, the Federal Reserve has printed more money than we have ever seen in the last 2 years. Now, the Federal Reserve printed all of this money for a variety of different reasons. Most of it was to lift our economy out of a recession and to protect everyone from the pandemic. Nobody really knew how long the pandemic was going to last for, so the Federal Reserve wanted to offer a lot of economic stimulus to give people a chance to continue spending money. When everything shut down, nobody was working. And if nobody's working, nobody is getting paid, which means our economy is going to tank. You'll see businesses fail, and you'll start to see individual citizens fail, and that means that everything in our economy is going to go down. Housing market will crash because people can't afford their houses, so they either have to sell or they have to go into foreclosure. And you'll also see the stock market crash because nobody is putting money into the stock market anymore. But all of this money printing was not free. It came at a price, and that price was inflation. Even though a lot of Americans were out of a job, unemployment was around 15% in 2020, they still had a ton of money to go out and spend. Spending money is what helps our economy. And that is exactly what happened in 2020 and in parts of 2021. People took all of this extra money and went out and bought things. And some of them absolutely needed these extra funds. But a lot of people didn't, and they bought things that they didn't need and just wanted. This led to one of the shortest recessions in our nation's history, but it also led to massive inflation because as people started to spend more, businesses couldn't keep up with all of the demand. They started running out of things, and when you run out of things and have high demand, you have inflation. Now, many experts believe that these supply chain issues are eventually going to go away in 2022 and 2023. The fact of the matter is, demand cannot stay high forever, and the supply of things will eventually be lifted up. Employers are trying to hire tons of people right now. They want people to fill all of these positions so that they can start producing more. Once they start producing more, demand and the supply of things will eventually equal an equilibrium, so that way prices can become more stable. However, the United States government printed a ton of money in 2020 and in 2021. There is so much money circulating throughout our economy right now that people continue to have more money. And because of inflation, wages are starting to increase as well. Typically, businesses and companies will give their employees around a 2 to 3% raise every single year. This keeps up with inflation because the Federal Reserve believes that a healthy level of inflation is 2 to 3% every single year. That means the price of things is increasing by around 2 to 3%. So if something costs $1 today, in 1 year from now, it might cost around $1.02 or $1.03. those raises keep up with inflation. However, if you only got a 2 to 3% raise this year, that is not keeping up with inflation, and that could be a problem. But the Federal Reserve is on this and only expects inflation to increase by around 2.6% next year. That is a lot lower than what we've seen, and it's a lot closer to the average amount of inflation that we are facing. But all of this money on the sidelines could be very good for the New York Stock Exchange. I think a lot of people realized in 2020 and in 2021 that they needed to invest. Their savings and their job was not going to save them if something happened to our economy and our society. They have to go out and invest so that they can grow their money and beat things like inflation. We saw the Dow, NASDAQ, and S&P 500s hit new record highs in 2020 and continually throughout 2021. Part of the reason for this is because we had so many new investors, first-time investors, putting their money in stocks. With unemployment so low and people having a lot of money, they're going to go out and spend this money. Some people might ultimately save it, but eventually people are going to invest their money. That could mean big gains for the stock market. And the Federal Reserve is also taking inflation a lot more seriously because inflation is out of control. So if inflation goes down in 2021 and the Omicron variant turns out to be no big deal and our pandemic disappears, then you could see one of the biggest years for the stock market ever. And there is just one more factor that we have to consider here when talking about a stock market boom for 2022, the United States government. The United States government can have a massive impact on what goes down on Wall Street. The reason being is because the United States government controls the monetary supply of the United States. They are a currency issuer, and the stock market loves to get US dollars. And we might start to see a lot more bills and programs passed next year. In 2020, the United States government started to pour tons of money into the economy. And what this basically meant was a lot of companies, particularly pharmaceutical companies like Moderna, Pfizer, and Johnson & Johnson, were starting to get billions of additional dollars. The reason that they were doing this is because of helping our pandemic and trying to end it through vaccinations. In addition, when the United States government makes decisions on bills, they also give a lot of money to the New York Stock Exchange. A lot of the time when the federal government passes bills, all of these stock market booms are kind of indirect. Like for instance, when President Joe Biden passed his $1.2 trillion infrastructure bill, that meant that we needed thousands of companies in order to help rebuild America's infrastructure. What happened immediately after were investors dubbing certain companies the infrastructure stocks. These infrastructure stocks were now companies that people could invest in because they were going to be getting paid by the United States government in order to rebuild our country. That means that they're very much protected when compared to a lot of other companies. You got to think about it like this. A company like Amazon doesn't really have a lot of government affiliation. However, if the United States government said they were going to start funding Amazon, Amazon would be a pretty safe investment because the United States government is not going anywhere. They will continue to print money and pour money into whatever they say they're going to because that's what governments do. The United States government is working on a ton of other programs right now, like President Joe Biden's Build Back Better plan. Now, while this may have long-term effects on our country in the long term, investors are going to be looking at these individual companies that are part of the bill and that are going to help get this program off the ground, and they're going to invest in those companies. And these are huge bills. The infrastructure program was around $1.2 trillion, and the Build Back Better bill is around $2 trillion. That is a lot of money, which means there's going to be even more money circulating throughout our economy. And while in the short term, investors may not see that as a good thing with inflation, remember, the Federal Reserve is trying to combat inflation as much as they can. They're getting more aggressive with inflation now in their monetary policies than they pretty much ever have in their 108-year history. So you have a Federal Reserve battling inflation, dropping interest rates, and pulling a lot of economic stimulus back so that way less money is in circulation, but you also have the United States government telling the Federal Reserve they need to print more money. Those two things are on the extreme ends of the spectrum, and what you ultimately have is somewhere in the middle, and investors on Wall Street are going to try to take advantage of that as much as they can in 2022. All of this could create the perfect conditions to allow the stock market to boom in 2022. But enough about what I think. What do you think about this issue? Do you think the stock market is going to explode and become the biggest bull market that we've ever seen in 2022? Or do you think we're actually going to see a crash or just an average stock market next year? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you like this video, make sure to hit that subscribe button below. Keep hustling, money minds, and I'll see you all in the next one.